8 ways to fix your financial challenges permanently if you are a salary earner. So you have decided to be an employee all your life, right? This means you are involved in a professional job which is fairly stable till you retire. Or your plan is to occasionally change jobs with better opportunities for your career. You are very clear in mind that you have no intention to do business in any way. That is okay, because not everyone should engage in business. What this means, therefore, is that your income over a lifetime will likely be fixed, or you will only get occasional raises. If you are in a situation like that, you need to take some deliberate decisions from today in order to live life to the fullest without any financial difficulties in future. Success lovers and financial independence seekers. Here are 8 ways to fix your financial challenges permanently if you are a salary earner. Point number 1, always make a monthly budget which you will use. The rule of thumb is 50, 30, 20%. 50% for necessities, 30% for discretionary expenses, and 20% for your savings and investments. Yes, I mean the word investment, not business. More than 20% of your income for savings is always better than less. Budgeting is for everyone at every income level, and being clear where your money comes from and where it goes is essential. These days, feeding, accommodation, and school fees, especially for our kids, take a whopping percentage of our income. So decide early enough what category of accommodation and schools are good for you that will fit your lifetime financial plan. If it demands you relocate to settle in a cheaper city or suburb, go ahead. Once you begin earning salary, you have virtually no one to fall back to in times of financial crisis. Therefore, you must act smart. My book, Keys to Unlock Your Financial Success, a handbook for new employees and graduates, will be a very useful read for you. To get a 40% discount on the book, please go to the comment section and type book. Point number 2, set up an automatic deposit to your savings account. Talk to your bank. Some banks just require your checking account information and the deposit amount you desire. The most important part of saving is actually doing it. And automating your savings can make sure it happens every month. Better still, go around a number of banks and inquire about high-yielding savings accounts. So once you have tackled budgeting in part 1, saving is your next big thing to do. Point number 3, pay your debts. Especially if you have high interest debts like personal or consumer loans, paying such debts are critical, because the rate at which the interest grows could outpace your investment or savings quickly. Whichever your situation, discuss with your creditor. You would be amazed how much discount you could get to pay off your debts or how flexible the payment could be. As a fixed income earner who is desirous of improving your financial health, I recommend the book The Millionaire Next Door for you. You can get the audio version for free on YouTube. Point number 4, make sure you have a retirement plan and contribute zealously into it. Never rely on only your employer's retirement plan. For those in Ghana, our compulsory retirement plans are called SNIT. Whichever it is called in your country, never depend on it alone as a retirement plan. Point number 5, shop for a life and health insurance policy for yourself and your family. The NHIS, or whatever it is called in your country, is not reliable. It may not even cover the most critical medical needs, so it is wise to plan ahead. Point number 6, check your net worth every year to see if you are in a good financial health or you are being swallowed by liabilities. If you budget wisely and spend according to it, automated your savings, paid your debts, contributing to a retirement account and health insurance, your net worth must be growing every year. So it is imperative to calculate your net worth every year to see how your money is growing. Point number 7, find a good mentor, a coach or a financial advisor who will guide you along the way. They will help you clarify your financial goals, hold you accountable to your plans, and most importantly, keep you on the right track. Point number 8, check and update your next of kin and beneficiary forms on all your investment accounts. This is so critical. As your children grow, your responsibilities over them also change. Hence, an occasional update of those forms would just be appropriate. Having stayed with me to the end of this video, here is a bonus for you. Over the years, you have certainly not planned in any way to be a businessman or a businesswoman. So do not be convinced by anyone or anything to start a business as your savings and investment grow. Keep to your old formula of automated savings and investment, and you'll be good to go. At best, what you can do is to switch to a higher paying job which affects your savings positively, and not to risk doing business at that advanced stage in age and career whilst you are ill prepared for it. Before I leave you today, here is the summary of the 8 points I have enumerated for you. Point number 1, always make a monthly budget which you will use. Point number 2, set up an automatic deposit to your savings account. Point number 3, pay your debts, especially if you have high interest debts like personal or consumer loans. Point number 4, make sure you have a retirement plan and contribute zealously into it. Point number 5, shop for a life and health insurance policy for yourself and your family. Point number 6, check your net worth every year to see if you are in a good financial health or you are being swallowed by liabilities. Point number 7, find a good mentor, a coach or a financial advisor who will guide you along the way. Point number 8, check and update your next of kin and beneficiary forms on all your investment accounts. Thank you so much for watching. Do leave a feedback in the comment section for us. See you in our next video.
We'll be right back.